Well, good weekend, all. Ira Epstein with your weekend edition of your metal market wrap-up. This is where we're going to look at weekly charts. And it is Friday evening, and it is the 5th of January, 2024. Now, I go through everything in the financial markets, my thoughts on the jobs report, which I'm not going to repeat here, in the financial market update. Go to that one and take a look at it. Please, that's where it's all at. We have had one of the best sales to start off a year that I've ever seen in my company. I've had a lot of people writing me that they're on vacation, they'll be back over the weekend. Can I extend or will I honor the sale for them until Sunday? And I've said yes, but I might as well extend it. So what we're doing is we are saying to you, it's really simple. Our New Year's sale will expire this Sunday, Central Time, midnight. You won't hear again on that. To take advantage, and by the way, let me give you an idea. Let's assume you want to trade the futures and you want to see my morning subscriber video. The cost of this is going to be in the neighborhood to you of about $7.50, $8 a month. You will get 22 videos, each approximately 15 to 20 minutes long, covering daily, weekly charts, special reports as well. They come out, and I record them at 5:15 in the morning, and you'll have them by 6 approximately in the morning. My full research, which is normally $600, is going to be discounted for you. Think about that. Down to $360, so it's about $30 a month. You get not only the videos, my twice daily written updates and the like, and it's about the same price in the Spider ETF video for the stock. So on the videos alone, $8 a month, you can't afford it, I really don't want to hear from you. Okay, it doesn't matter to me, all right? That's where it's at. Some of you write me on YouTube and you'll go, well, will you cover this, will you cover that? When I'm covering all this stuff in my subscriber videos, no, I won't cover them here in the free ones the way that I do that. I hope you appreciate that. That's what my people are paying me for. IraEpstein.com under the word research, move your cursor up here, spread your wings, $8 a month, pay it up front, you got what you can get, all right? Now, I'm going to hold a live webinar, not this coming Tuesday. Listen to me, not this coming Tuesday. A week from Tuesday, I'm scheduling in my first live one. If you're in my database, you'll get an invite to it, and then after I put that out to everybody, we see how many seats we have left, we'll bring it here for the general. To get on our database, you got to go to our website at IraEpstein.com, go to the free offers, if you will, and ask for something, or obviously if you're a client of ours trading through us and or research, you automatically get the first dibs. So, I don't think today's jobs report was enough to move the Fed in March, period. Yes, there's 2 more that they're going to see, so that can change. You got 2 more jobs reports and 3 sets of PMIs and CPIs that the Fed will get to see. But this report to me was so strong with 216,000 new jobs. What the heck is the Fed in a rush for? Number 2. The month over month and year over year wages are still going up, not down. So you got a strong labor market, you still have prices, and the Fed's supposed to ease interest rates to fuel on inflation, something they've been fighting now for over a year, and that's going to go up because of lower rates. And you want me to buy into the logic that the Fed is ready to drop rates. I'm going to stand my ground and say, no, they're not. When you look at the gold market, gold thrives on that. Gold wants to see inflation's not going away. Now, we're going to get PPIs and CPIs on, I think it's Wednesday and Thursday of this coming week. I could be off a day. I think it's either Thursday and Friday or Wednesday and Thursday. I already put it in my newsletter. And that'll be our first look to see what that is doing. That will certainly be an impact on the gold market because it's going to look at that. It already knows the jobs numbers. Is that bullish or bearish the dollar? Well, we'll see what happens here and what the Fed wants to do. Is the Fed going to over-tighten the economy if they see inflation picking up? Because the jobs numbers are strong as can be. So They're not going to loosen because of the jobs. Now the question is, does the CPI and the other do that? That's at least my opinion. I could be wrong on everything. When I look at how the market's doing right here, let's come back here. This chart was the monthly, and you're staying over. Support's back at the 1896 level. When we come to the weekly, this is only closing prices. You can see you've got a double top up here, okay, on a closing basis. And if we come back, that top area comes in for the resistance right against this level, the 2100 zone. You can see that. Now, remember, it's on a closing basis, not the spike highs that the market made towards 2150. You can see that up here. And on a weekly chart, it may not be to 2150. You got to get to the dailies to see it. Weeklies take the lead month, and it may not have been the Fed contract back then, right? So, and I can tell you it wasn't. So you look at to see what it's at, and you're in a congestion area. That's exactly where you're at. You're in a market that you can almost see the spike high and low as it pulled back, and you've been going sideways. The noise goes away if you put a swing line on the chart. Now, swing lines are only in our charting software and TradingView. I license on TradingView my indicators. And you've got higher lows, higher highs. No, you don't. You got higher lows, but lower highs. Do you see that? So you got a market that's suddenly narrowing in a little bit. Now that can revert and get bullish again if you take out 2098.20 on a weekly chart. But until you do that, you've gone into a pause mode. Pause modes could break you back down to wherever the 18-week average is. Now that's 1975, but if you and I go back a little bit on the chart, the week before it was 1969, about $6 lower, and the week before that around 1960. So let's just grab $6, the current number, and say it's going to be closer to 1981, because when the market reopens, it'll have a weighting where it's going to drop back 18 weeks and take the current one, and if you understand the weightings of them, that's how it's going to work out. It'll change during the week, but you're going to be in that broad zone that I'm talking about unless you crashed in the marketplace. So I'm looking for the market to be able to stay above the last break low here of 1975 as well. You got two numbers there. You got the 18-week and that. So that's where I think support can come in. I've already done a projection. Where's the resistance? I'm going to repeat. I thought the market would have great trouble at the upper band because it works against you. 95% of the time, the market will not stay over a Bollinger Band. That doesn't mean it can't run to it and get over it for a couple of weeks. It ain't staying there long. It ain't staying there long at all. And that's exactly what happened, what happened, what happened, what happened. On the breaks, what happens. That's the nature of the beast. I love it. It's one of the best trading tools out there if you learn how to work with it. And I don't believe it works on its own as well as when you tie in the slow stochastic indicator. Now, I've tried RSI. I've tried MACD. I used to teach this. I used to go on the road in the old... Remember, I've done this since the 60s. And I would be on the road. I'd fill up rooms. I'd go to the old commodity things. I remember when... there used to be the major events. There would be 1,000, 2,000 people that show up at these events, and you'd get a room in the hotel. You'd all speak on a big stage. I was one of the speakers, and you'd have the other people all there, and we would talk about what's going on. We'd write books. I wrote a book. Other people would write them through there. And it was different. Well, the internet, you don't need that anymore. You get to do this, and with the videos you can post on the internet, you don't have to have CDs and all that. The game has changed, but learning is not changed. It's how you learn, all right? It's how I teach. And I'm doing my new course right now. And I didn't work on it this week, so I'm behind again. Will it be January? I don't know, all right? I didn't count on the sale that we put up being this successful and answering all the questions all day long because people would call in and things I had to do to make it work for them. Okay, but here we are. So the pattern is lower high, higher low. Resistance could break down a bit and you're overbought. It's not a vehicle that on a weekly basis I'm in love with. The gold-silver ratio, as long as it stays over this 18-week average, you don't want to be in silver. Silver's the loser on this, and you can see silver market sort of stuck. Now, the interesting thing is where it got stuck. Right where it should. The 18-week average, right on the head. It's got two layers of support under it. The 200-week and the 100-week average. Momentum, unlike gold, isn't overbought. It's worked out of that. The bias is down, but you have no trend. You have the higher lows, lower highs. You get out and out bearish if the market takes out 2252. You could then get a wipeout and go down to the lower Bollinger Band. What about getting bullish? Well, you'd have to get back, and number one, you can't afford to take out this, as I just said, 2252. You have to get back over that high, but then you're right at the Bollinger Band. This chart pattern stinks. In the copper market, again, what did I say on the last report? I said, I don't tell clients to buy a 100-day average in an upper band in an overbought market. It's where I think the pros come out, not in. And bingo, this market down 2%, 800 points. Now, is it still a market to look at? Not on the long side here, not from what I see on the weekly chart. It's overbought. Yes, the trend is up and the bias is up, but you got to work out of this overbought condition. Platinum. I thought platinum would do better. I have egg on my face. I didn't expect this. I thought it would be, you could buy it again and it would go back up, and it didn't. I was dead wrong. Okay? Should have paid more attention to the overbought here, but the seasonals were so strong, I thought they'd go. My mistake. Probably wanted to get clients back into some trade, and it cost me. Got to, like everything else, you break your own rules in any manner, and that's it. You get subscribers. They want you to put out trades. That's why they're paying for you. Shouldn't have done it, all right? And you're not to blame. It's me. I should have said no, all right? But I was wrong to trade. If I walked on water, I wouldn't be here. Higher lows, higher highs, a lot of resistance. Nah, I think that's not a chart you can do much with. And in the dollar index, now the question is the market going to try to embed here and drop back down or not? Right now, it's just plain oversold. On a weekly chart, there's nothing to do here, but I think an event is happening. If the 18-week average gets underneath the 100 on a rally, I'm going to be very aggressive looking for reasons to be short, because I see a lot of resistance over the market. It would have to prove it can get right over that and stay there. And even if it shot straight up now and got through that high, you'd have a lower low, higher high. The setup looks like it's trying to be bearish, not bullish longer term. Well, longer term, you have until Sunday night. 1-year sale if you'd like to take advantage for new subscribers. If you have a monthly one, I've told you how it works over and over. I'll just let it at that. Move your cursor. You can see an icon. It'll take you to the website. Monthly purchase. Over here, you go iraepstein.com. Be sure you turn the little icon on. We have a button that's monthly and daily. We're not honoring this for any daily purchases, just 1 year. And you move that button over, and when you put in your card and all your information, you go to buy it. No discount code. The price will come off the retail by 40%, and away you go. I'm Ira. You have a great weekend. Thank you so much for supporting us. This was a great way to start the first week of the year for us, and I will talk to you all come Monday morning.